Great. Well, we're going to go ahead and get started. I'm Stacy Francis from Francis Financial. We're here today, as we are every week at 8 a.m., bringing you the information you need to know to get through the coronavirus. We are today going to be focusing on not only the weekly market roundup and focusing on what happened in the market last week, as well as some of the programs out there, but today we're going to be doing a deep dive into the Paycheck Protection Program, as well as some other emergency assistance programs. Time is of the essence, and I will explain that to you as we go forward, because right now we're seeing huge demand for these programs. So it's very time sensitive that you move on this information that we give you today. And if there are other individuals, friends, family, loved ones, colleagues that could benefit from these programs, please send them a copy of these recordings. We will make sure that we get this out to you hopefully by the end of the day so that you can forward this important information to them. So I'd like to say thank you and welcome for coming today. And I'm very excited to be presenting here today with my wonderful colleague, Devon Barrett, and he is an associate advisor. Welcome, Devon. Happy Monday.
Happy Monday morning.
It's great to have you here. And Devon is definitely an expert in the area of the market and what's going on in the world. So that's actually what we're going to do first, is we're going to talk about the presentation that we gave you last week, as well as what some of those recent developments are. As I mentioned, we're going to dive into that CARES Act and important self-care, because you can't get through this if you're not taking care of yourself. So without further ado, I'm going to go ahead and hand it on over to Devon. And Devon's going to be talking a little bit about last week's presentation, where we were focusing specifically on financial immunity and protecting your portfolio.
Thank you, Stacy. So last week, the big backdrop for our presentation was the passing of the CARES Act, the Coronavirus Aid, Relief, Economic and Security Act, which I have to give credit where credit is due. It's an amazing acronym. And that's something that we'll carry forward into the presentation this week, as well as Stacy mentioned. We'll be going into some of the provisions that were provided for individuals, as well as business owners as well. But what we really took away from this was that this was an unprecedented stimulus package. About $2 trillion in aid was put into pass for this, which was more than all that was attributed for the 2008-2009 crisis. And there's been a lot of great relief checks that are going out that we'll discuss, and also, as Stacy mentioned, that small business provision that we'll be talking at length this morning. There are also some changes to the retirement plan distributions, loans, and government-sponsored aid as well that we'll talk about. But another topic that we talked about last week was market volatility. There were a lot of ups and downs in the market. Last week, we saw the end of the first quarter, and unfortunately, it was the worst quarter for the U.S. stock market in history. But that being said, the volatility was really the key word, because there were ups and downs that we saw throughout the quarter. Even though it was the worst quarter, it wasn't just a smooth ride down. For example, when the CARES Act was passed on the 27th, that week we saw a performance spike. We saw the U.S. stock market, the S&P and the Dow, shoot up over 10% in that week. So that just goes to show that the market was really all over the place. It was acting like an irrational teenager, so to speak, last quarter, that it was reacting to news. And as we were dealing with market cycles and different things going on with the coronavirus, we saw the market reacting that way. And that's something that we'll continue to be dealing with as long as we are fighting with the coronavirus, as far as what the impact is to health, as well as what we're seeing with the economic fallout. And as I mentioned, the CARES Act was signed into law. And then because of this, we're also dealing with the social distancing situation in the United States as well. That has been extended through April 30th in areas like New York, the tri-state area, California. And as we've seen, that will continue to ramp up in areas that weren't having such strict shelter-in-place and social distancing orders as we continue to try to contain the virus.
So we have some recent developments here. Essentially, this is exactly as Devon had mentioned, that the social distancing has been extended to the end of April. Stocks actually fell a little bit this week as President Trump revised his position on the death toll, that it might be much larger. And unfortunately, the situation continues to be very challenging. What's interesting though, and Devon, you mentioned this,
Yep.
the market was a little calmer this last week. Even, I mean, not calm. Let's not just say calm, but
Right, right.
it was a
Yeah.
little calmer than what we had seen the previous week.
Right, and that's a great point, Stacey. And part of that is due to what the Federal Reserve has really done to stimulate the economy and try to keep us afloat during these uncertain times and these choppier waters. Right now, one thing that the Federal Reserve is really doing well is adding money into the economy, trying to get cash into the hands of the consumers to buoy us through this time. So the Federal Reserve right now is buying Treasury bonds and easing their capital requirements to put more money in the economy. And what does that mean? So, for example, capital requirements. Big banks are required to hold a certain amount of money in cash at all times, and that's something that we've seen that's really been scrutinized and put emphasis on after the 2008-2009 crisis. And what the Federal Reserve has done is they've eased it a bit on the banks to say, hey, you know what? You don't have to keep quite as much money in cash. So then that allows banks to make loans and put money into the economy, into the hands of the consumers. So, to provide a little bit more stability and a little bit more confidence through this uncertain time. So that's something that's really going to be a key factor, and it's why we've seen some of these ups and downs in the market, because the Fed is really moving quickly to respond to the different movements and different challenges that we're facing right now. But that federal stimulus is really going to be the talking point in the conversation around the markets and the economy, and it's really what's going to keep us stable ultimately through this uncertain time.
And what's interesting is that this isn't it. So they're actually looking at a fourth round of stimulus. And, you can see here there's a little bit of disagreement about what that's going to be. However, there's bipartisan agreement that there should be a stimulus, which is interesting. Something that I was excited about, Nancy Pelosi floated the idea of rolling back that limit that they imposed on being able to deduct your state income taxes, local income taxes, and real estate taxes. Now that really hit New York residents, also California residents in particular. So all of you listening from New York, that would be really good. It would put a lot of money back into our pockets. And Trump, interesting, is looking at something that he actually campaigned on, and the rebuilding of the U.S., roads, streets, things in desperate of repair, and creating a job stimulus package to create jobs by doing infrastructure spending. So it'll be interesting to see what happens here.
For sure, Stacey. And then another really important word on this slide is bipartisan interest, because I think that's something that really helped us last round. That there was a little bit of back and forth between the two parties as far as getting this passed, but ultimately the two parties were able to come together for the good of the country to say, you know what, we need to get this law passed quickly, and that's something that hopefully we'll see going forward. If if they decide to continue that next round of stimulus, we've already come to an essential agreement between the two sides, so it'll be easier to get things put into place.
That's great. All right, so now we are going to go ahead and go through the CARES Act, and there's two sections. First, help and aid for businesses, and then also for individuals. Today, we're going to focus the first section of our meeting today on the businesses. And the first piece we're going to be focusing on is the Paycheck Protection Program. And then we're also going to talk a little bit more about the Emergency Economic Injury Disaster Loans. They are two unbelievably important programs and what you need to know today. So let's dive right into the Paycheck Protection Program. It's quite a mouthful. It's also known as PPP, the PPP loans. And what's interesting is that while the SBA has put them and called them loans, what's really important, the most important key thing that you should walk away with today is that they can be converted to grants. In other words, this loan can be forgiven. And I'm going to give you the exact information you need to know to make sure that what you're doing is right, so it actually is forgiven. So essentially, this is free money. This is free money. They're not requiring any type of personal guarantee, no type of collateral. However, you can only apply for one PP loan per tax ID. Now, I applied twice, but I have two tax IDs. I applied for Francis Financial with their own tax ID, and I don't own Savvy Ladies. It's a 501c, but I am the agent for Savvy Ladies to fill out the form. And so I put the tax ID in then for Savvy Ladies as a 501c3 nonprofit. But If you want to take out 2 loans for your company, don't. It's not going to be permitted. Instead, take that initial loan out for the value that you think you need, because you can't go back for a second time. So when should you apply? Immediately. And actually, as of Friday, if you can believe it, $5.4 billion were already given out in over 17,000 loans. Now, the program level that you can see here, it's a big number. It's $349 billion. However, the sources that I'm talking to, the bankers and others, are very concerned that this is going to run out. And I've heard scary statistics that it could be as soon as this upcoming Friday. Now, I've been on top of this. It's been changing day to day. I can tell you I haven't gotten a lot of sleep trying to stay on top of everything, both because the SBA had changed their program several times up until the last minute, but also because how each bank is handling this is very different. There are a lot of banks that are struggling to be able to get the resources up online so that people can actually apply. As of this weekend, there were only 13 banks that had links available. Today, Monday, more is going to be going live. So it's very important. It's very important that you don't wait, that you start the application process as soon as possible. Unfortunately, a lot of people don't realize the timeliness of this because they see that these applications can be submitted through June 30th. But again, remember that this is only available until the program funds are exhausted. So who can apply? Who is eligible? Small businesses in general that have 500 employees or less. Now, what's interesting, they have made it even more available for companies that have chains, let's say an Applebee's. Applebee's probably has more than 500 employees across the United States. But to make sure that someone like Applebee's could benefit from this, what they've decided to do is that each individual premise, that is where you count the employees. So one Applebee's might have 40 employees. That still applies, even though in aggregate, Applebee's has much more. Now, there are some size standards. Certain industries, you're able to go above 500. And so I put this really important website in here. It's sba.gov size standards, so that you can see if you're happening to be above that 500, where you can go to make sure that you can still apply. Now, the types of companies that are eligible. This really we've not seen before. We just talked about, of course, small businesses, but this is one of the first programs that have been available much more broadly to sole proprietors, self-employed individuals, independent contractors like 1099s, if you get a 1099, as well as nonprofits, 501c3 and 501c19 with 500 or fewer employees. Now, there is a catch. Your business must have been operating in existence as of February 15, 2020. For most of us, that's not a problem, but it is important to make sure that your business was operating, that you had employees, that you paid salaries and paid payroll taxes on, or had paid independent contractors underneath your umbrella. So this is important because what we're finding and what I'm seeing is that there are a lot of individuals that could really take advantage of the PPP program, but don't realize that they can because, again, they've typically been the ones, the self-employed, the gig economy, the 1099s have been left out in the cold. And in this situation, they truly are not. So are you not eligible? Who's not eligible? Well, the first one, not surprised, if you're engaged in a illegal activity, your company is illegal. Well, yeah, I get that that one's not really not really allowed. If you are a household employer, so my nanny and Thea, I cannot apply for the Paycheck Protection Program. Even though she is an employee, she is on the books, I do everything by the letter of the law, I cannot use this program for her. And the reason why is that we're not truly a business. Companies that have a 20% owner who has been incarcerated, is on probation, on parole, or has been convicted of a felony in the last 5 years, or if the owners have defaulted or currently are delinquent on an SBA or federal agency loan within the last 7 years. So the reason why I'm saying this is that we're going to actually go through the form because I'm going to show you how to fill it out. And these are some of the things that you have to say no to. And it's really important that you don't accidentally click yes. How much can you qualify for? Now, don't worry, I'm going to send everyone the presentation and the recording so that you know how to do this. It's the lesser of either $10 million or 2.5 times your payroll. And how do you figure out what quote unquote payroll is? What that average monthly qualified cost is? Well, it's for the last 12 months. So there was confusion. At first, the SBA earlier in the week was saying for 2019, they have revised that now to say for the last 12 months. So when I filled it out this weekend, I took the date of March 31st, 2019 to April 1st, 2020. So that is the period of time that I used. So the question is, what is a payroll cost? This is a very, very important slide because many of us, when we think about payroll costs, we think about this. We think about salary and wages. But I want you to know that their definition is much broader. And the reason why it's important to include all of these items because it means that the amount of money you can get in your hands is much larger. So don't forget commissions, cash tips even. And I've never seen this from the government, but they're saying the wording they're using, and I read through their interim final report yesterday, word for word, was that if you have documentation for cash tips, great. If you don't, just estimate. So here it is, the government just saying, hey, we know you're probably not paying taxes on this stuff, but put it in anyway. I think that's pretty
Wow.
interesting.
Oh,
I think that's interesting.
that's nice
Yeah,
of Uncle Sam.
it's very nice of Uncle Sam. Now, any payment for vacation, parental leave, family, medical leave, or sick leave, important. Also, employee benefits. So, health insurance that you might pay on behalf of your employee, other insurances that you might have to pay on your insurance premiums that you pay on behalf of your employees, and then retirement benefits. We just gave profit sharing out to all the employees in our 401k. That actually qualifies, that portion that the company gives to their employees. And some companies don't give profit sharing, some companies give a match. So, you'll put in $100 and they'll match maybe $50. That too is something that you can include in that calculation. Now, state and local taxes that you pay, the employer pays on the compensation of your employees. And then also, if you unfortunately had to let an employee go, terminate an employment and paid severance or some type of financial benefit for them in those last 12 months, that too can be added into the calculation. Now, I know that this is a lot. I actually have a beautiful Excel spreadsheet that we used to do these calculations. I'm happy to send it out to anyone who would want, where it allows you to quickly and easily add all these things up to get your ideal number. Now, there's a couple things that do not qualify. If you have an employee whose principal place of residence is outside the United States, you cannot add in their income. You cannot claim that. So again, the reason why is they want this to focus on Americans, to help Americans. So if you do have an employee living outside the United States, doesn't mean that you can't qualify for this program. It just means that you can't use their income to get to that higher number for the loan. This is also really, really important. Any employee whose total payroll package, including vacation, medical leave, things like that, is over 100,000, you can only take in consideration up to $100,000. So we have employees that make above $100,000, and you can't claim that. And I have a couple great examples to show you how to calculate this when someone is above that range. So again, you can definitely claim the income of those people who make over $100,000. I want you to know, yes, you can do that, but you can only claim up to that $100,000 cap. Now, this is important too. A lot of individuals pay independent contractors. Instead of having all employees, they have independent contractors that work for them and maybe work 20, 30, even 40 hours a week. You cannot claim them. And the reason why you cannot claim their income is because through this plan, you can see very clearly that they can claim this income for themselves, from themselves. So you can't be doing the double dipping. And so they need to be doing this on behalf of themselves. All right, so here is an example. Now, this is an easy example. In this company, no employees make more than $100,000. And we looked at the monthly payroll expenses over the last 12 months, and it's $120,000 when we added in all their benefits, the retirement, we added in payroll, taxes, got it to that 120,000. So to figure out what that average monthly payroll, not so hard, 120 divided by 12, it's $10,000. So how much are we eligible in this situation? We're eligible for 25,000 because it's that average monthly payroll, which is $10,000 times 2.5 equals $25,000. Now we did another example to show you what does it look like if you have a couple employees that make more than $100,000. So you start off with the total payroll expenses, including those higher numbers. So for this company, it's a bigger company, you can see it's $1.5 million when they added in the salary, wages, bonuses, commissions, health insurance, other insurance expenses, retirement income, as well as state and local taxes. What we did is then we took out what's the dollar amounts for those employees that are above 100,000. And we realized that there was a total of about $300,000 in excess. So it's the 1.5 million minus the 300,000 amount over 100,000 that's excess, getting us to what? That 1.2 million. Average monthly payroll, essentially $100,000 a month. They are eligible for $250,000. That is the max loan amount. Now, what's important as you go through this is to know what you can spend this money on. And it's very important that you spend it correctly so that you have your loan forgiven. So you can use this, of course, to pay your employees, to continue the health insurance, other insurances, to cover employee compensation, mortgage interest. Let's say you have your business owns an actual property and has mortgage interest, rent, utilities, and any type of interest on debt that was incurred before the coverage period. Now, the interest rate is capped at 1% on this loan, and the interest will be accruing, and the maturity date is in 2 years. Do these things really matter? Not really, but what they're saying is that your interest will be forgiven, the principal will be forgiven, and that you should have submitted all the paperwork to show that you've used this money in the correct way, essentially within the next 2 years. That's where that date comes from. This number has changed wildly. It started off at 4%, then it went down to 0.5%, and where they landed on is about 1%. So the loan forgiveness, how do you get this forgiven? Well, as I mentioned, it will be forgiven both the principal amount of the loan that you borrow as well as the accrued interest. And the loan will be forgiven if by June 30th, 2020, a business restores its full-time employment and salary levels as they were February 15th, 2020. All right, so let me say that again. So it will be forgiven if by June 30th, 2020, your business has the same number of employees and roughly the same salary levels as you had back on February 15th, 2020. Now, the challenge is, and something you need to know, is that only 25% of the loan can be used for non-payroll costs. So what I'm saying is that these items right here, mortgage interest, rent, utilities, and interest on debt incurred before the coverage period, your loan, let's say it's $100,000, only 25%, only $25,000 of that $100,000 can be used to pay these items. The other 75% must go towards payroll costs, healthcare benefits, employee compensation. Now, why is that? The reason why the government is instituting this is that the primary reason that this program is being put in place is to stem the number of people that are let go or furloughed from their jobs. So they're requiring for the forgiveness that you primarily use this money for keeping your employees. Now, many of you have had to let go of employees. You, you actually get additional credits for rehiring those employees and bringing them back. So just because you've let go of employees after February 15th, it does not mean in any way that you are not eligible for this. If anything, you are the type of loan that the government wants to be able to underwrite and make happen, because you can bring those people back with the money that you receive. Now, they will reduce the amount that of your loan is forgiven. And I think that this is important to know. It's not an all or nothing, meaning that if your employee headcount, you're not able to bring back the total number of employees you had as of February 15, 2020, you still will have your loan forgiven, but it will be reduced in proportion of the reduction of how many employees you have. And then remember that second piece I talked about, not only the number of employees that you had as of February 15th, but what the wages were, the compensation for those employees. Essentially, any employee making $100,000 or less, if you reduce their salary by more than 25%, the amount that is forgiven will also be docked. Now, and I think it's really important because what they're really focusing on is they're focusing on those average Americans that are making $100,000 or less. The requirement for your highly compensated individuals that are making maybe 300 or 400,000, there's not the same requirement to keep them at those high levels. They're really focusing and going to be looking at how many of your employees that are making $100,000 or less, how many had reduced wages. And if you hit 25% of reduction or more, then the amount that you have that's going to be forgiven in this loan is going to go down. But again, trying to make it very clear so that you can see. So the way you get your loan forgiven is that you're going to work very closely with your banker. And they're going to, again, look at the number of employees on payroll and the pay rates during the 8-week period following when you receive the loan, So that's when you have to be very careful. And for the best case scenario for you is that the bank account where that loan hits, whether it's Chase, Bank of America, that you change that account to be the account for your payroll, that you use that account to pay your rent. so that you can easily prove that you've used this money the way that it should be intended to be used. So really important. And you will need someone from your company, a representative of your business, that is going to verify the accuracy of these documents. And the penalties are pretty darn stiff if there's any type of fraud. So again, just make sure you dot your I's, you cross your T's, and you do this the right way. And the way I'm doing it is that I have a brand new bank account that is receiving this money, and I'm taking that bank account. Nothing is going in and out except that loan. And the only thing that's going to come out is for, again, payroll expenses, health insurance, rent, utilities, etc. So it's very clear and very easy to prove to the banks. So this is important. You can't go to the Small Business Association to apply for this loan. You can't. That's not how this is being rolled out. Instead, it's being rolled out with thousands of banks across the United States. But what I'm showing you here is extremely important. These are SBA loan providers, Small Business Association loan providers. And the reason why it's important to go to these banks is that they are the ones that are quickly able to be set up and accept loans. I reached out to First Republic, my bank, and you will clearly see that First Republic is not on there. Their estimated link going live that they told me is another 3 or 4 weeks. That's not ideal because most likely the funding in this program is going to be exhausted from them. I ended up going out to Key Bank. I opened an account, I did all the paperwork, and I got my application in. Now, it was not pretty, it was not easy, but Key Bank already has their application live, their links live, and I wanted to make sure that I got mine in. Now, so far, right now, the companies that have live links that I know on here, there's about 13. The biggest ones are Chase. Chase has theirs live. They actually went live on Friday. Also, Bank of America and Wells Fargo. Now, you're going to reach out to your own personal bank first. Reach out to your bank first because you will be put in line ahead. A lot of these banks are not offering loans to individuals who are not currently customers. So Live Oak, for example, I signed up with them the day it came out and I got on the waiting list. I looked at my email this morning and they said, we are still processing loans for our current clients. Once we are done with that, we will open it up to you. However, we highly recommend that you exhaust all resources. So reach out to a few banks, and in particular, the ones that you have relationships with are the ones where you'll most likely get ahead. That's what you want to do. So how do you apply? How do you actually apply? So your bank is going to help you. They have an application that will be online, and it's typically when you log into your account. So once you've logged into your online banking, you'll see typically if the link is live, a link right there for the Paycheck Protection Program. You would then click that and you'd start your application. A few banks are not doing that and are actually accepting the form that I'm going to show you what it looks like, and they're doing it that way. But most banks will be doing this online. So as I said, if your bank is not participating, like First Republic is not really participating, reach out to one of the banks that I listed right here for you. You can also get this list of banks off the SBA website and just put SBA loan providers, and it's going to give you this whole list. Most of the forms, as I mentioned, are going to be online. This is important because you have to have consents and e-signatures from all the owners of the company. Now, it's not hard for me for Francis Financial, I'm the only owner, but think about someone who might have 2 or 3 owners, and we're all at stay-at-home orders. So this is really important. Many of them are using DocuSign, and so make sure that everyone is available to be able to also put their e-signature, their consents, because you need that from all of the different owners. So what do you need to fill out the application? And I have the application right here. It's called Form 2483. Form 2483, also known as the Paycheck Protection Program application form. You're going to need a good amount of information to be able to fill out this form. And my best practice suggestion is to get this form, print it out, and I'm going to give you the link to where to get this form, and then fill it out by hand so that you've got all the answers you need, so that when you do apply to that link and the link goes live, you can quickly fill it out. So you're going to need documentation, documentation actually showing what your payroll costs are. So your payroll processor records, your payroll tax filings, if you get a Form 1099 miscellaneous. If you don't have any of these documents, you can also submit bank account records that show that payroll amount going out to your employees. And then finally, you're also going to need to submit how you calculated the loan value. And that's why I had created that Excel spreadsheet that I used to prove how I calculated everything. And the reason why this is important is because the bank is actually underwriting this loan. So they're taking on liability, because if you don't get forgiveness, you have to pay it back, and it's on the balance sheet of the bank. And they're essentially hoping then that you would be paying it back. So this is all really important and key to make sure that you have the information you need to fill out this form. So how do you get the payroll processor records? If you're giving payroll, you can get this through, maybe it's Paychecks you use, Heartland, whoever you're using, TriNet, they can give you all this information. I would say ask for these as soon as possible, because I know with TriNet, they were very much delayed, and it took me twisting their arm to get this information from them. Why? Because everybody in the world is asking for this information. So that's how you would actually get these documents. And the reason why you need them is that, at least when I did this through KeyBank, they had a section at in the application process where I could upload all of these documents. So that's really important. You're going to want to make sure that these documents, that you have them saved on your hard drive or in your computer, so that you can quickly upload them as part of your application. So this is where you can get the Payroll Protection Program application. There are a lot of applications floating out around because there have been so many different versions. And I filled out one version and then they changed it. And I filled out another version and then they changed it. So this is supposedly the final application. And you can just go to the sba.gov and you'll get a copy of that application right there. Now, what I'm going to do, though, is I'm going to dive into what information you need to fill it out. So we just talked about the documentation that you need for proof that's going to be part of this application. Now I'm talking about the actual, all the blank little boxes and the things you're going to have to fill out. So first, you're going to need the tax ID number of your company. Next, you're going to need the Social Security number of all your owners plus their home address. You're going to need the driver's license or passport of the authorized representative of the business who's filling out the form. So as I filled out the form, I was taking liability, saying that this information is correct. And so I had to put my identification in there as well, including my driver's license, my date of birth, things like that. You'll need to show the number, the average monthly payroll for the last 12 months. You'll have, again, as I talked about, make sure that you have all of that documentation online ready for you to upload into their system if they ask for it, to prove the payroll numbers. So that might be the 1099 miss, that might be your paycheck receipts, and then also how you calculated that average monthly payroll. All right, so this is what it looks like. There's a couple sections, and we're going to go through them. So at the top, you're going to check which one. And so are you a sole proprietor? Are you a partnership, C Corp, an S Corp, LLC? Are you an independent contractor? Are you a self-employed individual? 501c3, 501c19, a tribal business, and other. You'll then put your business legal name. You'll put the business address. Right here is where you put the business tax ID, business phone, the primary contact, and primary contact's email address. So if this is you filling this out, then you would be putting the primary contact of you as well as your email address. The average monthly payroll, so that's the, in that situation, that the one that we looked at, it was $10,000 a month. And so times 2.5, the total loan would be 25,000. The number of employees, and then you're also going to put how you're going to use this money. And for me, I just clicked payroll. Here is where you put all the owner's information. So each owner, and there's quite a few boxes listed, and many of them online, the boxes grow if you need it. So the owner's name, their title, how much they own, their social security number, and then their address. On the next page, you have, and it's hard to see this, but all of those things that I just spoke about previously of not being convicted of a felony, blah, 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 blah. These are all of your certifications saying that that is not something that is a problem. And then again, the authorized representative, if you are the one filling it out, it's going to be your name here. And again, most of these are e-signature, so they're super easy to do. The economic injury disaster loan. So this is different. This is different. This is an emergency advance. It's a loan, and these loans can be quite large. But what's special about these is that you can get an immediate advance up to $10,000. That advance is actually given to you quickly. The ideal is to get it, they want within 3 days of your application. It's quick. It's supposed to be for that small infusion of cash. And again, what's important is it does not need to be repaid. It does not need to be repaid. Now, we've had questions, could you use both of these programs? And the answer is yes. The answer is yes, but the challenge that I'm seeing is that if you take out this $10,000 as well, that the amount that you're eligible for under the payroll protection program reduces by $10,000. So it doesn't mean you can't do both, but it looks like taking $10,000 out through this would reduce your payroll protection program. Now, it may not be a bad thing still to do this, because what the benefit of this is again, it's supposed to be a smaller amount of cash that's very quick for you. This you actually apply at the SBA website. So remember the Paycheck Protection Program, you have to do through a bank. This you do through SBA website. And let me show you, you can fill this out literally within about 7 to 10 minutes. And this is the website, covid19relief.sba.gov. And when you go there, you're going to see this application, and it's going to ask you, do you have less than 500 employees? Are you a sole proprietor, or are you an independent contractor? These are all things that they'll ask you so that they have the information that they need from you to be able to give out this loan. This is those things of, not engaging in illegal activity. This is interesting, not delinquent on child support obligations. These are all things, again, that you'll have to fill out. But what's interesting is that that's pretty much the application. It's a phenomenally short application online, and you can really do it within like 5 to 10 minutes. And
Sweet.
And Devon, I think a lot of people, I've gone through this information phenomenally quick. There's so much detail and there's so many questions, but I wanted to share this, that actually here in New York, the SBA is open 8:30 to 5 o'clock. I have a friend who just called them, and what she did is she actually just was doing laundry while she was on hold, and found that the people she talked to were phenomenally helpful and insightful in her situation. And she's a 1099. She is a film producer, and she's able to benefit from this. Even though she doesn't have employees, it's just herself, she's going to be able to benefit. And the SBA was very helpful. But Devon and I are here too to be able to share and help you through this process, because I know that it's frightening. I know, I'll be honest, when I was filling out my application online, even though I had it in front of me, my hands were shaking. My hands were shaking.
Wow.
And part of it
I can
was,
imagine.
is that when I hit that link button, it didn't work. I had to refresh 150 times before the application came up, because there were so many people that were trying to hit that link too. And finally I was able to get it. So it, the process took me 3 to 4 hours, because I had not only to do it for Francis Financial, but then I had to start again for Savvy Ladies, and Savvy Ladies was 200 times I had to refresh and get there. Um,
Oh man.
but I will tell you, my husband and I stayed up late. We had a bottle of wine after, and we celebrated. And I was freaking done. So
You
yes,
earned it for sure.
we earned it. It was quite a process, I will tell you. All right, so let's dive into here.
Great.
And Devon, I know you've got a lot to talk about. And this
For,
in particular, we're going to be focusing on some individual things that you can do for yourself and your employees to get through this process.
Great. Yep, Stacey. And a couple of things that we'll focus on are changes that the CARES Act has provided to unemployment insurance, those relief checks that are going out. What are the provisions around that? What are some of the different things that we should be looking out for? And then also some more things to think about if you're a business owner that you are applying for some of these grants and loans that Stacey just mentioned. What are some of the pitfalls to avoid and other things to be thinking about? So the next slide, you'll see the first thing that we'll talk about is unemployment insurance. So there have been a lot of great positive changes to the unemployment insurance program, the first of which is that $600 benefit a week. So typically when you apply for unemployment insurance benefits, the state that you're applying in will decide, they will determine for you what your amount per week should be. Under these uncertain times, what the government is allowing for, you'll get that benefit that's calculated for you, but you'll get an additional $600 per week on top of that. So that's extra money in your pocket to really help you get through times where you've lost your job and you're trying to figure out what's going on. You've got some additional money to take a little bit of stress and financial strain off your plate. Another really great expansion was the length. So typically if you apply for unemployment benefits, you get 26 weeks maximum of coverage. Right now, during the COVID-19 crisis, what the government is allowing for is 39 weeks of coverage. So an additional 13 weeks on top of that typical 26. So if, let's say you've been furloughed for quite some time and you're looking for work, you've got an additional 3 months essentially of benefits coming to you due to this new provision. And last but not least, another really great expansion that's been provided for self-employed individuals. So independent contractors, 1099 employees. The CARES Act has not forgotten about you. You are also eligible for benefits where typically you wouldn't be, which is really great. So if you're a 1099 worker, get online, make sure you get your benefits because you are eligible now due to the changes in the CARES Act. Great. So relief checks. So these are something that you've been hearing about in the news a lot. So essentially, if you're an individual and your adjusted gross income for 2019 is $75,000 or less, you get $1,200 stimulus check into your account, no questions asked. And for married couples, that amount is $2,400 if your AGI is 150. So it's a one-for-one essentially there from an individual to a married couple. And then for parents, for each dependent child that you have, you get $500 per child. So this is a really great stimulus that the government is giving you just to put money in the pocket of the consumers, just to stimulate the economy, and also provide a little bit of relief in these uncertain times financially.
So Devon,
Now,
I'm just going to throw this out there. Those of us parents who have having to do the remote learning, I think we need more per child.
Oh yeah.
Personally, just throwing that out there.
Took the words right out of my mouth.
It's been really hard.
$500.
I'm like literally for what we've been through.
Yeah, right. You now have to put on your teacher's hat and you only get $500, which is a lot. It's crazy to think about, but yep, it's something. It's definitely something. And how does this work? So essentially, if you file your 2019 taxes, but since the deadline's been moved, to July 15th, which we'll talk about later in the presentation, this will also go off your 2018 tax return as well. So if you filed your 2018 taxes and you're within the limits, you will get a refund check or a relief check. And that the way this is processed, it's the same way that you would have gotten a refund or paid taxes. So if you have direct deposit with the IRS set up, you will get this $1,200 or $2,400 or whatever it is based on the number of dependent children. That will be deposited directly into your account. Unfortunately, if you're doing snail mail and you're getting paper refunds or you're paying taxes with snail mail, your check is going to come the same way. So you're at the mercy of the United States Postal Service at that point. But hopefully, fingers crossed, hopefully it'll get to you sooner rather than later. And the estimated time frame that the government is saying for direct deposit right now is you could start to see your deposit as early as mid-month, around April 15th. But like I mentioned, with those paper checks, it could be a little bit longer. It could be 3 to 4 weeks. We'll see what that looks like.
Yeah, and it's interesting. You'll want to check with your accountant. I've had an accountant tell us that if your AGI in 2018 was much higher, your income was much higher than 2019, that it might be good to rush and try and get your 2019 in if it's come down a little bit. I would confirm it with your accountant, but that's something as far as a strategy that I've heard as well. So we'll see.
That's a great point. Definitely.
This is a little hard to, it's a little hard to see, but I feel like it's a nice chart. Yeah.
Right. If you squint, this is a great chart because it shows you. So essentially, with the relief checks, there are phase-out limits. So I mentioned that 75,000 for individuals and 150,000 for married filing jointly. I believe it's 112,000 for head of household. So there are a few limits there. You can see that, under those amounts, you get the full benefit. So you can see that line, that horizontal line, shows you that you're getting the full amount. Then what you'll see is it starts to slope down at each filing status, whether you're single, married filing jointly with 2 kids, 1, you'll see that it starts to slope down. And the reason for that is there are phase outs, because once you cross a certain threshold, you no longer are eligible for benefits. So for example, you can see that if the single filer with no children, once you get to that 99,000, right about that 100, your benefit is gone, because the reason is that it's prorated. So what happens is once you cross that 75,000, every $100 of AGI that you make reduces your benefit by $5. So eventually it slopes all the way down until you get to 99,000. Then unfortunately you don't have a benefit anymore. And the thought process here is really it's to get this relief into the hands of the Americans that need it most. So the higher earner you are, the thought process is you don't need it quite as much, so it saves money for those that do need it. So that's why it comes down that way. So now we're switching gears a little bit and talking about changes to retirement plans, and there are a few. The first is with required minimum distribution. So essentially, what is a required minimum distribution? So at age 72, now it's 72. If we did this presentation at this time last year, it would have been 70 and a half. That's a recent change. But so at age 72, the government requires you to take money out of your retirement account, whether it's a traditional IRA, SEP IRA, simple 401k, and if you're still working, there's some provisions there, but I won't muddy it up right now. So let's just, for simplicity, all retirement plans after 72, you have to take money out. Now, for those who are relying on this money in retirement, they look forward to RMDs. But for those people who have other sources of assets, taxable assets, other income coming in, a pension, Social Security, whatever, and don't need this money, RMDs can be a burden. And that sounds strange because what is happening is money's coming out of the retirement plan for you, and you don't pay taxes on money in a retirement plan. You pay when the money comes out. So what Uncle Sam is trying to do here is trying to get you to pull money out of the account so then you pay taxes on it and you're generating some tax revenue for the government. So like I said, if you don't need that money, it's just additional taxes that you're paying each year. So what the government has done with the CARES Act is they've waived RMDs for 2020. So you can keep that money, if you don't need it, in your IRA, growing for you, not increasing your taxable income, which is a really great provision here. And another thought process with that is that your RMD each year is calculated based on your value of 12/31 of the previous year. So for example, if you were taking an RMD for 2020, that RMD would be calculated based on your balance as of 12/31/2019. Now, how does this come into play? Well, as I mentioned earlier in the presentation, we had quite a quarter in the market as far as performance-wise. So likely your balance at 12/31 was pretty much significantly higher than it is right now. So if the government made you take out money based on that balance, you'd be taking out a disproportional amount coming out of the IRA because your account value has come down. It should have been smaller. So the government realized that. So not only do they want to keep more money in your pocket, they realized it wouldn't be fair to make you take out that huge chunk of money, so they're waiving RMDs for the year. Similarly with distributions. So from a retirement plan, if you're taking money out and you're under age 59 and a half, if you're taking money out, you're hit with a penalty, 10% off the top. If you're taking $10,000 out of a 401k and you're under 59 and a half, no questions asked, $1,000 of that is going towards a penalty. Now, if you've been impacted by COVID-19, so what does that mean impacted? So whether you have it, kids, spouse, you're furloughed, whatever that means, if you can show that you've been impacted by the coronavirus, you're not eligible for these modified provisions that the penalty is waived. So no matter how old you are, you can take money out of the retirement plan without having to worry about that penalty off the top. You can also take $100,000 out of the plan from your IRA or your 401k or 403b at work to help you deal with the impact of the coronavirus. And now this is an interesting provision as well too. So if you do take money out of the retirement plan to help you, you've got 3 years to pay it back into the account, or 3 years to pay the income taxes on the distribution. So let's say you take out $100,000 and then you put in $33,000 a year over the next 3 years. You're great. You don't have to pay tax on that money because you've replenished it and you've circumvented that issue. Now, if you aren't able to put it back, then you've got 3 years to pay the taxes due on that distribution. And you have a couple of options there. You can work with your CPA. You can either pay it in 3 years. Right now, the default is that the government will just assume that it's spread out evenly over 3 years. So for example, you take out $75,000, you don't pay it back. The government will look at it as if you took out $25,000 a year in 2020, 2021, and 2022. So that's something to work on with you. If you do take that distribution from your retirement plan to help you deal with any kind of impact that you've been seeing due to COVID-19, then you'll see that what you'll have to do is work with your accountant to determine the best way to pay that back. Great. Loans. Another great provision that's changed is loans out of a 401k. So your employer plan, you can take a loan from it. A lot of people don't know that. It's something that you can do. And if you're in a position of hardship, this is a time that you can tap that 401k. Now, typically, the maximum loan that you can take from a 401k is the lesser of $50,000 or 100% of your account balance, whatever is lower. Right now, what they can do is you can still take that 100% limit is still there, but if you have more in your account, that maximum is bumped up from 50 to 100. So you essentially got double the amount there. So what the government here is doing with more flexibility built in. So if you have any kind of issue with COVID-19 and just funding, you're in a cash crunch, now you have more options to keep some kind of semblance of normalcy in your financial life. And then taxes. There have been a bunch of changes with the tax returns due to coronavirus. One of them that we've been talking about is the pushing of the deadline. So everybody knows that the April 15th deadline to file and pay taxes has been pushed to July 15th. But there's also been a delayment of payments in employer payroll taxes as well. 50% can be delayed for 1 year, and the remaining 50% can be delayed for 2 years. And another big one, a big change, is this is for business owners as well, modification of net operating losses. So what does that mean? So essentially, if you are a business and you're on your tax return are showing more expenses than income, you've got a net operating loss. And what you can do is you can use that to offset taxable income. Now, in previous years, what you've seen is that, so in 2018, we passed the Tax Cut Job Act. And what that did was, before that was passed in 2018, what you could say, if you're a business owner, you had net operating losses, you could use that, you can carry that forward to offset future income for 20 years, or you could carry it back 2 years and offset income or taxes that you've paid in the past. Tax Cut Job Act was passed, and they said, you know what, we're getting rid of that, we're making a little bit of change. You can carry it forward indefinitely now, but you can't carry it back anymore. So that was something that business owners were dealing with recently. But what the CARES Act has done is they've modified it yet again. So they've come in and said, you know what, you can still carry it forward indefinitely, but now we're going to let you go back 3 years as well. So if you've already filed taxes, you paid taxes, and you've got a net operating loss, you can still go back. And then the beauty of that is you don't even have to amend your tax return. You can apply for a tentative refund based on that net operating loss. So that's something to definitely work with your accountant on. If you've got a net operating loss, and then you're trying to see what the best way to do that is, work with your accountant, because there have been changes due to the CARES Act, which allow you to now go back as well, something that wasn't available before the CARES Act was passed.
That's great. And the other thing I just want to let people know, this ability to not pay payroll taxes in 2020 and then pay equal installments, one in 2021 and one in 2022. What I'm reading is that this is not going to be available to employers who receive assistance through the Paycheck Protection Program. That's what I'm reading. Now that it may have changed because bless, it keeps on changing, but that's something that I had read as well.
Absolutely, absolutely, and that's something really important to remember. Just so in these times when you're looking at the different provisions, you can see that Stacy's point was a really great thing to look out for. That there are little fine print and footnotes that you should be on the lookout for, because one benefit that you're taking may not be eligible to you if you're taking other benefits. So always, it's really important to take a step back, take a lay of the land as far as what you're claiming as far as assistance, and know that you're like Stacy mentioned, it was a great line, dotting your I's and crossing your T's, because you want to make sure that, when all is said and done, you don't want to get into any issues with as far as an audit or remittance or anything like that, because you weren't keeping good records or didn't know the footnotes in the notes. Also, just like with any other financial uncertainty, with any kind of financial plan, it's good to know your fixed expenses and to project how much your expenses are going to change and increase. It's something, not even right now, but that's something to carry forward too. Just always keeping an eye on your expenses. And the key as far as with what you're borrow what you need. Because if you run into a situation where, let's say, for whatever reason, you aren't able to show those qualified expenses and now that's actually a loan to you, you're going to kick yourself if you took out more than you needed and it wasn't forgiven. So really take a step back, see what you need, and apply for that. And of course, don't delay. Don't delay. Get in there, get that money.
Yeah, and I don't want to freak people out, but this is so important, and I want to make sure that people can really benefit from these programs. So please, reach out to us if you have any questions, if we can help you in any way. Whether you're a client or not, it doesn't matter. This is my mission, and I feel like, unfortunately, the people who are benefiting from these programs are often people who have accountants that are doing the process for them. And there are a lot of people that are smaller businesses or maybe don't have as much extra cash to afford expensive accountants, and they need this even more. So really, really important. And I'm just going to finish up. I've got 2 slides, so stick with me on this, but I can't say it enough. This is one of the most stressful times I know I've lived through, and the piece that's keeping me able to keep on going and being everything I can for myself, everything for my family, for the team at Francis Financial and Savvy Ladies and our clients is taking care of myself. And it feels selfish, but I have found it makes such a difference. And so this morning I worked out with Laura Miranda. We've got a session coming up this Thursday at 5:30. I'm going to be there too. In fact, I'm going to bring my kids, but I will tell you that the more that you can get yourself moving, the better. And so we've got a great Zoom link here. We'll send it out to everyone as well. And then the week after, we have yoga with our very own Deborah Donnerfeld. And then the week after, the 23rd, again, stretch and tone with Dr. Laura Miranda. And what's great about these sessions, wherever you are in the fitness realm, it's tailored to you. So, a push-up, I can barely do a real push-up, where Devon does push-ups probably, 10, 20, knocks them off. Like, for me, it's tough. And so I have to do my push-up modified. And so everything will be modified for different ability levels. So please do this for yourself, really important. And things, again, move your body. Game night, we just did Family Feud, and we're going to be doing Jeopardy online via Zoom with some family members. We've been calling someone at lunch every day, whether it's Mimi, my mother-in-law, or my dad, or my brother, or our Aunt Thea, our nanny who we miss. And going for walks. I was really proud. I walked 12,000 steps yesterday, and my husband and I woke up at 5:30 before anyone was up and took the dogs for a really long walk, and it just felt so good, and it really helped. And I have a book of fiction books to read. I have 3 of them to read, which is crazy. I haven't read a fiction book in probably 15 years. They're all business books. And so I'm doing that. But again, make sure that you're taking care of yourself. And I'm going to also say this one right here: support your community and do what you can do. And whether it's yelling outside your window at 7 p.m. in support of the delivery workers and the nurses and the doctors and the healthcare and the, firefighters and everyone that's making us get through this as healthy as possible, or helping a friend that is homebound, that can't leave their home and having a hard time with delivery of food. If you work in a doorman building, bake some cookies, offer to bring them a coffee. This is really important. And the more we take care of our friends, our family, our neighbors, the more that we feel better inside. And that's
For
really
sure.
important. That's how we're going to get through it. So I just want to say thank you. Questions. I know we're going late, so what I'm going to ask you to do is email your questions, and you can email clientrelations@francisfinancial.com. You can also email myself, Stacy, Stacy, at francisfinancial.com, and we will try and get back to you as soon as possible with the information. I will tell you that we're not part of the SBA. We've been learning this as it comes, so we don't know everything, but what we do know, we will share. And if we don't know something, we'll try and help you get that information. So thank you so much for being here, Devon. Thank you for being my co-pilot today. We got through a
It's
lot
an
of
honor.
information in a pretty
For
quick
sure.
time. So thank you again for everyone coming.